Hello and welcome Forex traders. Steve here, tradingforexforprofit.com. Today is Saturday, July 25th, 2015, and we're looking at the Aussie New Zealand on the 1 hour time frame here this afternoon. The reason that is because it happened to be the last trade that I took this trading week on Friday, where I took a bounce along on this bounce right here, the stop hit, and was stopped out. So as what I wanted to show you, I wanted to stress the importance of a strict adherence to the proper risk-reward setup, okay? And I was stopped out here, however, as I went back through my trades for the week, I found that I had taken two other trades that were profitable on the Aussie New Zealand 1 hour time frame. So although I lost this one, I won two other ones, okay? So that still gave me a net profit of 3 positions. Okay, we'll discuss that further here in a minute. Okay, so if you're not familiar with what I'm talking about, you can go to our website, click the link below. It's totally free, and go to the risk-reward calculations, how to calculate risk-reward. Because what we do and what we teach you to do is to figure a percentage of your account that you want to have, that you want to risk, and it needs to be set up in such a fashion that every single trade you take, you risk exactly the same amount, regardless of the spread or the pips for the stop loss. Okay, so what I'm getting at is if you have a 50 pip stop loss, or a 25 pip stop loss, or a 10 pip stop loss, the trade is going to be worth the same exact amount as one is the other. Okay, so go check it out. Click the link there below and go check it out on the calculate risk reward video that we have. But what I want to do first is I want to back up to the beginning of the week on this New Zealand, just to show you what I'm talking about. Okay, so the first aspect of a trade is going to be your entry. We teach you the patterns and the signals to get in on. Okay, so I'm using just the patterns that we teach in our course, and I'm taking the 2-to-1 risk reward, and I'm going to show you exactly on just the Aussie New Zealand 1 hour time frame what happened this week. Okay, so here's a bounce. There's a stop hit, center band rejection. Okay, 2-to-1 obtainable. You win that one. Bounce right here. Here's the stop hit on that. 2-to-1 obtainable. So you win that one. Now here's a unique situation. Well, it's not entirely unique, but it does happen quite a bit. We have a stop hit on this level. Okay, at the outer band. If you would have entered this, okay, you would have taken two times profit. If you would have waited for the engulfing and entered on a retrace, still kept your stop above here, you would have also taken profit. Okay, here's the engulfing. You could have taken profit on this one if you waited on the retrace right here. If you traded this bearish spike and took the retrace here, you would have got 2-to-1 on that one as well. So there was 4 opportunities to enter the same exact trade, all 4 winners. Okay, you break down through this support level, and that's checked. With this spike, there was 1 opportunity. The engulfing, there's your second opportunity to take the same trade. All right, we bounce back for the retest. This is a break and retest pattern. If you've studied the course, you'll know that. This is the break check. This is the break retest at the outer Bollinger Band, profitable. Okay, and here is the one that's a stop hit on the support level that failed. It looks like perhaps the market wanted to go just a little deeper before regaining the upward momentum. So if we count these up, okay, there's 1 profitable trade, 2, and we're going to count all 4 of these entries as 1. So we've got 1, 2, this will be the 3rd successful trade. We'll count these 2 as just 1, so that's 4, and this break retest for 5. So there's 5 winners and 1 loser. Okay, so if you do the math on that, and let's just assume for 1 minute that we are trading a $5,000 account, and we're going to trade 3% of that account on every trade. That's $150. Okay, you can do the math. 3% of 5,000 is $150. So every one of these trades is set up with a stop loss of $150, or a target of take profit of 2 times that, of $300. Okay, which happens to be what I trade now. I trade for that on every trade. So as you go through here and add these up, you would have won 5 trades at 2 times profit. So that would be 10 positions of $150, or you could do the math this way. $300 on a winner and you won 5, so that's $1,500. Okay, on this one you lost $150, so you can take 1,500 minus 150 and come up with $1,350 net profit on one pair, one time frame, 6 trades for the week. Okay, so what I happen to have done was I traded. I believe I got in on this entry here, and I got in on the retest right here. So I actually won 2 positions, $600 total, and I lost this position of 150. So my net profit on this pair on the 1 hour time frame was 450 for the week. So I just wanted to show you the absolute strict adherence to the risk reward setups that we teach is one of the key elements to any successful trading plan. Okay, so I challenge you to go forth next week and set your trading goals up to a 2-to-1 profit. Take the entries that we teach and just see what happens. Okay.